Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. It is the 27th of the 1st, 2023, and this is going to be your daily cryptocurrency market update. And we've got quite a bit to go over. Yesterday, we covered a video where we looked at $1.4 billion of Bitcoin options expiring today. That is going to have an effect on the price. And we did actually in the video say that there was more calls than there was, or more puts than there was calls. We actually got that wrong. There's slightly about 15% more puts than there are, or calls, sorry, than there are puts, which means there might be a bit of sell pressure today. However, you guys will know that we took a kind of non-bearish approach from the 1st of January. And I actually do envision that the cryptocurrency market is going to see continuation over the next 3 to 6 months, potentially, certainly from an investment point of view. This is something we positioned for at the start of the month. But we will talk about that. I also am going to release a video talking about the Bitcoin 4-year cycle theory. And are we just following it? You know, it would be kind of frustrating if we were, because I would like things not to just be that simple. But it is following it rather closely. But it's my opinion that we won't just forever, the cryptocurrency market won't just forever follow this kind of a 4-year cycle. But we will cover that. We're actually going to be looking at a sort of broader macroeconomic context to start the video off. Because we had, and we had spoke about this on Sunday and of course on Monday to remind you guys, the US GDP, which rose 2.9% in the fourth quarter, more than expected, even as recession fears loom. So, part of the reasoning for us to have taken a position in the cryptocurrency market, as discussed with my Patreons back on the 5th of January, was simply because we think that the worst is behind us in terms of the macroeconomic landscape and fiscal policy. And we actually think that now markets are going to look to price in cuts, having all of last year and actually starting from November, cryptocurrency really front run all markets in terms of starting to price in those cuts. We actually think that the worst of that is well and truly behind us. And now markets are going to look forward and look for reasons to put cash back on the table. And what better way to do that than at the start of a new year with a brighter macroeconomic landscape? We've looked at things like the 2-year US government yields and a number of other things. And actually this would have been not priced into markets in regards to it would have had a harsher outlook. Okay, along with inflation. People had inflation higher for longer. I think inflation may be a little bit sticky and not quite get down to 2 to 3% as easy as they think, but it is coming down, and this is going to sway sort of macroeconomic policy. And we'll talk about that because actually, if you look at Japan, for example, I think they had a record, the highest inflation in 41 years. They're recently having that, whereas the US, the UK, Europe has kind of already had that, and we're now coming on the back end of it. Japan is still going through that, and that's because their monetary policy is just, I mean, I understand it, but struggle to understand it, if that makes sense. And actually, to bring and to touch on Japan, the dollar is very much part of Bitcoin's story. And where the dollar is right now, if you were to bet on this going short further, okay, maybe eventually, but you're betting at this at a point, in my opinion, where it looks quite likely sometime soon for it to have some sort of a rally, or at least some sort of a kickback from this sort of sell pressure. And I actually think that things, of course, the real question is what happens to Bitcoin when this happens. So you've got to keep an eye on that sort of stuff. But let's focus on the GDP. So gross domestic product rose at 2.9% annualized pace in the fourth quarter, slightly better than expected. Consumer spending weakened from the previous period, but remained positive. That's an important point. So it's weakening because of all the debt sort of burdens that have been put on people, but it's still positive. A sharp slide in housing helped pull down GDP, whilst boosts in government spending and private investment aid growth. Jobless claims fell last week, while durable goods orders increased sharply in December. Of course, Christmas but mainly due to demand for aircraft. So it's a mixed bag right now. And I think that, you know, ultimately you can't ignore monetary policy. It's going to have an effect on consumers. The question really is do they do this harsh monetary policy whilst upping the debt ceiling and inflating, their currency and debt more so? So they're kind of taking away with one hand but giving with another. And this is something I think people really aren't paying attention to. And all the kind of macroeconomic statistics that we have, they're at really bad points right now. And this has people continuing to stay on the side of being bears. However, these low points, I think, have largely been priced into markets for a lot of this sort of macroeconomic data. And actually, there's been a sort of reassessment. The economic landscape is ever changing. And what worked last year may not work this year. And you've got to sort of factor all of that in. And the fact that we had a positive GDP, the UK had a positive GDP, Germany had a positive GDP, which is mind-blowing, shows that maybe things aren't as bad as we had once thought. And I think people have to sort of take into account that we live in a different world post-lockdown. Okay? It's completely different. And a lot of the previous metrics, you've got to ask yourself, well, those metrics showed up under a completely different set of circumstances. Like on-chain analysis, there's never had to go through March 2020 onwards. So it went completely out the window. And it's never had to factor in Bitcoin's entire existence from 2008 onwards has been from under QE, quantitative easing, stimulus. We've never had a period where we've had sort of quantitative tightening. And that's actually, of course, thrown a lot of on-chain model. I mean, Plan B's career got just duppied. But that being said, I am going to make a longer video tomorrow looking at the Bitcoin 4-year cycle theory because we are kind of following it. But we will cover that. So I think the macroeconomic situation is a lot better than what people are or were once predicting. We've had big players like Jamie Dimon, Paul Krugman come out and sort of confirm that. And actually, I think Bitcoin is going to do rather well. This was what initially led us into the markets, this bullish RSI divergence. Go ahead and minimize my face. That we took very, very seriously. And the RSI is very much acting in the same manner that it has, previously, which is something we're going to look at as well in our next, our 4-year cycle theory video that we've got coming out tomorrow. And I do think that Bitcoin's setting up for more continuation. In the same way that you set up for more continuation here or here, you can see that it's natural to have some sort of a rest. And this hasn't been a pullback with any kind of veracity to it. And we've largely seen buyers come in and take the bid on these sort of legs. Now, this is a pretty nasty wick, but it's really, in my opinion, just traders doing what traders do and looking to short resistance. We keep running into these kind of periods. The sell pressure's pretty weak. Here was one. We did expect a bit more of a pullback. We did get the pullback, but not quite to where we wanted it. And you're now at this sort of key level where you're going to find a bit of an issue. However, it's very likely, in my opinion, that you're going to set up for more continuation. At this point, I'm looking for 30k Bitcoin. People are going to say that's ridiculous. Bitcoin on track for the best January since 2013, led by bullish trading in the US hours. The thing is with this is you've also had extreme sell pressure over a year, which really compresses buyers to the point where they'll come in and it will be quite aggressive. So when you compress, it's like a spring, you're compressing things, and then when it kind of lets go, this is what you get. And you've got to remember, we did have one of the largest, so we literally waited from here down to here to get into the markets. We've literally had one of the largest players capitulate, and that's can often be not such a bad time. And I actually think that Bitcoin is likely to start outperforming the stock market, potentially gold and a number of others. Potential breakout, recent strength across the board. This is something we posted a while ago, or a week or so ago. This is Bitcoin against the S&P. You've got the same structure here across the board. Bitcoin against gold, and Bitcoin against the US dollar. So are the tides turning? Potentially. despite everything that we're saying, we're not actually calling a bottom. We're just saying that we bought at a point where we saw value. For anybody that wants more on what I'm doing, where I'm buying, what I'm buying, feel free to go ahead and check the links out in the description to my Patreon. You do get early access to content. We did interview Derek Yu, the founder of Pure Stake, and of course Moonbeam and Moonriver yesterday. That video is already released for Patreons. And also we've got an early release video with Francis Hunt, which will be coming out on Sunday on this channel. So feel free to go and check that out. Yeah, I think the macro sort of economic data is changing. You know, we've got brighter, bluer skies ahead of us than what we once did, and you can see that really echoed in some of the comments, like what we're seeing with the likes of Jamie Dimon and you know, lots of sort of models that were economic models that these big institutions had came up with for 2023. A lot of them have been scrapped and they're now looking at things, and it's all really centered and based on inflation. Remember, we've got a new set of CPI coming out next month. Going to be very interesting. Do we see a slight bump? That will sort of maybe spook markets a little bit. You know, if you do look at commodity prices, which you should be, you can see that actually, you know, commodities are also up. But this is kind of very similar. I think there's an appetite for markets again. And we do have a video being released with Francis Hunt, the market sniper, coming out on Sunday. He talks about that and understands that way more than I do in the sort of correlation. So please, guys, that's definitely not one to miss. So that's really all I've got for you. Now, stock market's at a bit of a critical level, although it's broken it. We did look for the pullback here. We said traders will bid this. But look at what it's doing now. For the first time, you've essentially broken out. And this goes back to, it's all centered around liquidity, which is dictated by the sort of macroeconomic landscape and where it is or isn't going. And you can see, again, bullish divergence. We had that bearish divergence on USDT dominance. We've highlighted all of this to you guys on a number of occasions. We were one of the first people to look at this break and actually call it. All the videos are still up there. Twitter feed and Twitter posts are all still up there. It's going to be an interesting time. I don't think it's going to be totally blue skies ahead. And you know, there is always what the yield curve is predicting coming to fruition. But the fact of the matter is with the yield curve is actually, it's not until the yield curve is uninverted and it's at this real point of inversion. So until it gets back to uninverted, that the crash happens in the stock market. And you can go and look at this for yourself by overlaying the two charts. So that's really all I've got for you in this video, guys. We think that you're going to have moderate pullbacks, but ultimately we have a bullish outlook over the next 3 to 6 months. You know, something we were talking about post-January, but certainly took that non-bearish position and actually reallocated into the markets in just really at the start of January. On that note, I'm going to love and leave you. Have a wonderful Friday, guys. I will see you all in the next YouTube video. Thanks a lot for watching.